me, Frank!
Welcome to Let's Be Frank, the weekly podcast that gives a quick take on U.S. stocks from the perspective of a value investor. I'm Brian Frank, a professional investor with over 20 years' experience specializing in small and mid-cap value stocks. Every week, I'll cover what is working, what isn't working, and talk about the value we're finding on the hunting trail. Find out more at frankfunds.com. Now let's get to it. Today is Friday, August 7th, 2026, and you wanted a rebound in momentum? You got a rebound in momentum this week. The S&P 500 High Beta ETF, ticker SPHB, was up about 5.5% this week, outpaced by a 10.6% gain in the semiconductor ETF SOXX. Value tried to hang on, but the low volatility ETF, ticker SPLV, was flat, and many good earnings reports in our holdings were ignored, or worse, sold off. During the significant outperformance of value in the last several weeks, I have been saying on this pod to brace for the dip buying in momentum. Even though I knew it was coming, it was still a painful week. These whipsaws make you want to chase, and I think especially in this modern factor-driven market, chasing is deadly for long-term returns. Instead, I should be happy with steady and improving fundamentals in many of my value holdings. Let's take a look in what worked in value. Defense contractors worked well in value this week, despite the excitement in momentum stocks. Frank Value Fund Portfolio Holdings Science Application International, ticker SAIC, and Leidos Holdings, ticker LDOS, increased 6.9% and 17% respectively this week on solid earnings reports. Earlier this year, defense contractors had to contend with the DOGE initiative as well as threats from artificial intelligence. As time has gone by, it is clear DOGE had little to no ability to cut defense spending, and AI will help these companies become more efficient and add value to their U.S. government contracts. It looks to me like the lows are behind us in defense contractors for 2026, and investors will gradually price these companies at historical valuations, which still leaves room for upside in the future. What didn't work? Higher on the frustration scale were earnings reactions in independent power producers, or IPPs. Specifically, Vistra, ticker VST, and Talen Energy, ticker TLN. Due to the hedging programs and a mild winter, these companies have noisy earnings per share numbers, but usually investors look past that and at the bright futures for electricity demand. Vistra announced the formation of Helix Digital Infrastructure with NVIDIA, KKR, and the Kuwait Investment Authority. Talen closed an acquisition and raised their long-term guidance for free cash flow before growth investments. Typically, both these events would garner investor excitement and stock price increases, but 2026 seems to be the year of range-bound trading for IPPs. As frustrating as it can be to watch these negative earnings reactions, it would be far more frustrating, personally, if the fundamentals were weakening rather than strengthening. Strong fundamentals give me the confidence to hold for the long term and benefit from high electricity prices and data center demand. Next up is on the hunting trail for value. The hunting trail is always busy during earnings season, and this week was no exception. I found a spinoff company suffering a large pullback in the industrial sector, and I'm eager to dive deeper into this name. As a value investor, the first layer of research is always quantitative, making sure there's a margin of safety from low valuation. After that, the qualitative work begins, looking into the industry, competition, opportunities for growth, management, and a potential catalyst to close the valuation gap from undervalued to fair value. Though the qualitative part takes far longer to do, I am excited when an idea reaches that point. Wrapping up, we definitely got our momentum bounce this week, and growth investors are feeling good and think things are back to normal. We will see if this bounce continues next week. There are also many more earnings reports to go through as earnings season continues next week. Thanks for listening, and have a nice weekend.
Performance data quoted represents past performance and does not guarantee future results. The investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be lower or higher than the performance data quoted. You may obtain performance data current to the most recent month end by calling the Frank Value Fund at 1-888-217-5426 or visiting our website at frankfunds.com. Returns include reinvestment of any dividends and capital gain distributions. Non-FDIC insured, may lose value, no bank guarantee, The fund's investment objectives, risks, charges, and expenses must be considered carefully before investing. The prospectus contains this and other important information about the fund, and it may be obtained by calling 1-888-217-5426. Please read it carefully before you invest or send money. This publication does not constitute an offer or solicitation of any transaction in any securities. Any recommendation contained herein may not be suitable for all investors. Information contained in this publication has been obtained from sources we believe to be reliable, but cannot be guaranteed. The information in this publication represents the opinions of the individual portfolio manager and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Also, please note that any discussion of the fund's holdings, the fund's performance, and the portfolio manager's views are as of the recording date and are subject to change without notice.